In 1998, Warren Buffett walked into a room full of sophisticated Wall Street analysts and made them feel like complete idiots without saying a single harsh word. He was pitching an investment that every expert had rejected as overpriced and outdated. The company hadn't innovated in decades, their growth was slowing, and younger competitors were stealing market share. But in just 3 minutes, Buffett used a psychological technique so powerful that these same analysts started questioning their own expertise and begging him to explain how they'd missed something so obvious. That investment was Coca-Cola, and it became the most profitable stock purchase in investment history, generating over $50 billion in returns. But here's what's truly remarkable. Buffett didn't use complex financial models, insider information, or sophisticated analysis techniques. He used a simple storytelling method that makes the most complex investments feel like common sense to anyone listening. What's up, everyone? Welcome back to the channel where we decode the psychological strategies behind legendary business leaders. I've spent over a decade studying how the world's most successful investors think differently, and our 10 million subscribers know that the insights I share here go far deeper than what you'll find in any finance textbook or business school curriculum. Today's story reveals the secret behind Warren Buffett's greatest superpower, and it's not his analytical ability or his patience. It's his uncanny ability to make brilliant investments sound so obvious that people wonder why they didn't think of it themselves. This psychological technique has made him one of the richest people alive, but more importantly, it's something anyone can learn and apply to their own decision-making. So, what was this mysterious technique that made Wall Street's smartest minds question their own judgment? Buffett calls it farmland thinking, and it's the reason he's never had a losing decade in over 60 years of investing. Here's how it works. Instead of explaining investments using financial jargon, market analysis, or industry terminology, Buffett translates everything into simple analogies that people already understand from everyday life. When those analysts questioned his Coca-Cola investment, he didn't respond with price-to-earnings ratios or market penetration data. He said, "If you owned the best farmland in the world, would you sell it because this year's corn crop was smaller than last year's?" Suddenly, the entire conversation shifted. The analysts weren't debating beverage industry dynamics anymore. They were thinking about something they instinctively understood. Good land produces value over time, regardless of short-term weather variations. Coca-Cola wasn't an overpriced stock in a mature industry. It was the best farmland in the beverage world, temporarily undervalued because people were worried about short-term crop yields. The psychological impact was devastating to his critics. Buffett had reframed a complex investment decision into a simple farming analogy that made his position seem not just reasonable, but obviously correct. Anyone who continued arguing against it would sound like they were saying good farmland was a bad investment, which feels absurd at an intuitive level. This farmland thinking approach has been the foundation of every major Buffett investment success. When he bought Apple stock and everyone said he didn't understand technology, he didn't argue about smartphones or software ecosystems. He said, "Apple is like owning the best corner store in every neighborhood in America. People visit that store every day, and they're willing to pay premium prices because they trust the quality and experience." When critics questioned his investment in American Express during their 1,960 seconds scandal, he didn't discuss credit card industry trends or financial services analysis. He said, "When you have a good reputation, temporary problems are like a hailstorm on good farmland. The storm passes, but the quality of the soil remains unchanged." The neuroscience behind this technique is fascinating. When humans encounter complex information, our brains activate what psychologists call systematic processing, where we carefully analyze details and look for potential flaws. This makes us naturally skeptical and defensive. But when information is presented through familiar analogies, our brains switch to heuristic processing, where we rely on patterns we already trust and understand. Farmland analogies trigger what researchers call the availability bias. Since most people have intuitive understanding of farming, real estate, or corner stores, these analogies feel more reliable than abstract financial concepts. Our brains treat familiar analogies as evidence, not just explanation, which makes Buffett's investment logic feel proven rather than theoretical. But here's where Buffett's genius really shows. He doesn't just use random analogies. He specifically chooses comparisons that highlight the exact characteristics that make his investments attractive. When he calls a company the best farmland, he's emphasizing durability, consistent value production, and long-term appreciation. When he calls it the best corner store, he's highlighting customer loyalty, premium pricing power, and essential daily utility. This creates what I call the obviousness illusion. Complex investment decisions suddenly feel simple and clear because they're connected to concepts we already believe in. People walk away from Buffett's explanations feeling smarter and more confident, not confused or intimidated like they do after typical financial presentations. The results speak for themselves. Buffett has convinced millions of ordinary people to become long-term investors by making sophisticated investment principles feel like common sense. His annual shareholder letters are read by people who would never touch a finance textbook, because he explains everything through stories about farms, baseball players, and hamburger stands. Here's how you can apply Buffett's farmland thinking to your own communication, whether you're pitching ideas, selling products, or convincing people to support your vision. First, identify the core principle behind your idea that people need to understand. Don't focus on the technical details or industry specifics. Ask yourself, what fundamental truth does my idea depend on that people already believe in other contexts? Second, find an analogy from everyday life that demonstrates this same principle in action. Buffett uses farming because everyone understands that good land produces consistent value over time. What familiar situation shows the same logic as your idea? Third, structure your explanation around the analogy, not around your actual proposal. Don't say, my app will capture market share through network effects. Say, this is like opening the only coffee shop in a small town. Once people develop the habit of coming there, new customers naturally follow, because that's where everyone else goes. Fourth, let people reach the conclusion themselves rather than telling them what to think. Buffett rarely says, therefore, you should invest in this company. He presents the farmland analogy and lets people realize that buying good farmland at a fair price is obviously smart. Fifth, anticipate objections by extending the analogy. When people worry about short-term problems, Buffett doesn't abandon his farming metaphor. He talks about weather, seasons, and crop cycles, which makes temporary setbacks feel natural and manageable rather than alarming. The most successful leaders don't just have good ideas, they have the ability to make their good ideas feel obvious to other people. Warren Buffett proved that the right analogy can be more persuasive than mountains of data, more compelling than expert credentials, and more memorable than sophisticated analysis. His farmland thinking approach has generated hundreds of billions in investment returns, not because the analogies themselves are magical, but because they help people access wisdom they already possess and apply it to new situations with confidence. The entrepreneurs, leaders, and communicators who master this technique don't just get better results, they create followers who feel empowered rather than dependent, educated rather than manipulated, and confident rather than confused. Warren Buffett's greatest achievement isn't his wealth or his investment returns. It's his ability to take the most complex financial concepts and make them feel like conversations you might have with a wise neighbor over the back fence. The question is, what complex idea are you trying to communicate, and what familiar experience does it really resemble?